Hi, welcome to another 5-minute topical tax update from me, Robert Newman, Tax Director of Carter, Collins and Meyer. Today's topic is developing your garage, room or garden into a workspace. This is something that I've had lots and lots of questions about in the last 12 months. It has a range of areas of concern if it's something you're looking to do, and I thought it was worth putting together a brief video about it. The question that most people come back with is, if I create a garden room, develop my garage, or alternatively, and I'm just going to call it working from home room at this stage, or room in your house or something at this stage, but it's essentially all the same. But everyone thinks, it says to me, if I have a room in my house that I develop for working, can I claim the costs of it against the profits of my business? Well, as I like to in these videos, I'm going to preview the answer. Probably not. Like most things in tax, it is a mixed bag of complications. The physical structure itself, even if it is movable, doesn't qualify for any tax allowances. So that garden office that you've seen advertised in the back of the Times for 25,000 quid probably doesn't get you any tax allowances. The stuff that goes in it, be that your room, garden space or garage, probably does get you some tax allowances. So be it the electric cabling, the piping, the heating, the desk, the chairs, the light and the heat. You can probably put some of this against tax. However, it is a part of plant and machinery within your business, which means the amount that you can put against tax is going to be limited according to the capital allowances regime applicable at that particular point. For the next couple of years, you have a £1 million annual investment allowance, and that does disappear. Can't remember the exact date off the top of my head, but within a couple of years. But for most people, even when that does disappear, it probably is still going to be something you can claim. If you do happen to have spent over that as your company, you're a larger company listening to this and you have spent over that £1 million, it's going to be something that sits within a general pool and attracting 18% relief per annum on a reducing balance basis. In other words, it's probably not as efficient as it first appears. The other things that you need to think about is, though, potentially some of the VAT can be reclaimable. This is fairly straightforward if you're not on flat rate accounting. If you are on flat rate accounting, the project value needs to be more than £2,000. And you are going to have to get your builder, contractor, or installer to specify and break down on the purchase invoice that they give to you what exactly the expenditure has been for. There is no point just saying garage development. It will have to have specifically what each of the areas of that garage development have been, what is therefore part of the structure and fabric of the building, and what is plant and machinery based. Very important to have if you want to be able to claim anything. Now, there are some disadvantages as well of trying to make a claim in this way for anything connected with your home. The biggest disadvantage is that it is quite likely that you can turn your home, or part of your home at least, into something which is chargeable to capital gains tax. Most people, if they only have one home, are able to claim principal residence relief. That means you pay no tax on the sale of your home. But if part of that home is used exclusively for business and you come to sell the house, that percentage of your house will become chargeable to capital gains tax. So if your house was worth £100,000 and you put a garden room on it and it is now worth £150,000, and that area represents 10% of the value of your house by area, £5,000 of the gain is now chargeable to capital gains tax.
This can be a shock if you're not aware of it, so please do think about it if you're going to claim exclusive use and be able to you make claims within tax returns for expenditure and development. But it may still be worthwhile depending on personal allowances. The issue, however, is that capital gains tax and ownership of properties tends to be a long-term thing, and the advice may well have changed by the time you get there, because these things do have a habit of evolving over time. The other issue is if the area is used exclusively for business and you have managed to put a convincing argument that that garden room you have put in is entirely and utterly used for the purposes of your trade, you probably are going to end up with some sort of benefit in kind charge on it on a P11D. Yet more admin to do if you're not careful. So I would watch out for those. Overall, what would be my suggestion? Well, my suggestion would be to not claim for the capital elements of it, the fabric, but do seek to have your business pay for the stuff you put in there. The desks, the chairs, the cabling, the shelves you put on the wall, and all the other stuff that actually become the fabric, the stuff that makes the office, as opposed to the fabric of the building. These things should be made out as costs to your company, not to you personally, or you have to do a proper expenses claim documented with receipts. And in that way, you are likely to minimize both the administration, the opportunities for HMRC to raise assessments if you do have an inquiry, and the eventual costs involved to you. One final comment that you do have to think of is potential business rates. This is a total minefield. What you may have to do is check your local authority to see whether it is necessary to make some business rate payments for part of the home. Again, if it is on an exclusive use basis and you are actually trading from there, you probably will fall into needing to pay something. And I would say it's almost certain, if you have a garden development or other external building that you have put on your land, that you are going to have to make some sort of business rates declaration. If it's just a spare bedroom that you're turning into an office for yourself, less likely that you are going to need to do something, but I would still refer to your local authority. Hopefully that covers the major tax issues and what is available to you. There will be a written piece below this particular video for those of you that think I talk too fast, because I know I have been told I do. That's me, Robert Newman, Carter, Collins and Meyer. I am the tax director and can be contacted at tax@uk-ccm.com. Thank you very much. See you in the next video.